Some real concerns this afternoon about the crypto market. Prices have plunged. And now the Wall Street Journal is reporting that both the Department of Justice and the Securities and Exchange Commission are investigating a popular crypto platform after its apparent collapse. Mitch Avnet is CEO of Compliance Risk Experts, a consulting firm. Thank you so much for being here. I want to start with this platform, FTX. Many people might be familiar with it thanks to a Super Bowl ad that we actually have a little bit of from last year. It featured Curb Your Enthusiasm star Larry David. We're going to get back to that because now he's sort of trending on social media. But back to the seriousness of all of this. Explain the liquidity crisis, because it's caused really the entire cryptocurrency market to tank here.
Sure. Well, I think you have to take a step back and look at the market in general. And I think the events that have been unfolding the last couple of days really are part and parcel of the collapse that we saw back in last May. $3 trillion loss in the sector, coupled by regulatory uncertainty, risk of fraud, and the liquidity issue with FTX. After there was an article that was published in an industry publication disclosing that there was an affiliated or related entity held a large portion of their native cryptocurrency, FTT, and that just started more and more of this spiral.
Yeah, okay, and we're showing that commercial now because a lot of people are saying, Larry David, a wise man, he didn't get crypto, and now sort of this commercial is coming back to haunt FTX. Explain a little bit more about what's driving all of the uncertainty here, and what are the implications of these investigations by both the DOJ and SEC?
So, you're dealing with a very volatile asset class and an immature asset class. And I think part and parcel of where you need to get regulatory involvement is when the mainstream investor is involved, the consumer, and really is ill prepared to understand that volatility. The volatility is great in an up market, and we all saw all those opportunities. But in the down market, that's where you really see the impact to individuals who jumped in and may or may not be able to get their money out of these exchanges because of these liquidity issues. So, of course, there's going to be regulatory concern. And as it relates to FTX and their related entity, Alameda Research, there are, I'm sure, a host of conflicts of interest that may or may not have been disclosed. And the DOJ and the SEC really need to understand what wasn't disclosed, and what that impact would have been had the individual investor understood all of that.
Okay, so as we wrap up this conversation, what about those who have money in crypto? And what's the best approach to coping with this major down market?
So I've been in the capital markets for over 30 years. And when you see a sector like this going through issue after issue, you see the whole sector struggle when one event causes a snowball with all related types of securities or assets or digital currencies in this instance. I implore individual investors to be very careful and thoughtful about how and where they invest, and really understand the terms of service before you decide to open an account with any particular vendor or an exchange, and understand what your rights are, what their rights are, and what avenues are available to you should something like this happen, and whether or not you're going to be left holding the bag.
Okay, some good advice. Really appreciate your time today, Mitch. Thank you.
Thank you so much for having me.